Good afternoon, everyone, and welcome to the FX Daily Roundup. And I'm filling in for Blake today. He's, I think if you're watching on the Face Roundup or Face webinar, he's at the Phoenix Open today. Let me get rid of this. Let's see if I can. One moment. So he's at the Phoenix Open today, so I'm filling in for him just for today. He'll be back tomorrow. We start out the day relatively quiet. As you know, we start out in the European session, or we have the webinar, the European crossover webinar, where we set up our bias chart support levels, resistance and support for short-term trading, i.e. day trading / scalping. But you can see here that the euro had been relatively quiet. We'll move this out of the way. Go on and take a focus here on the overall daily chart here. And as you saw, our bias chart support was at 992. Let's pull this back. But, you know, here's the concern. We are just above 110. We did take a dip. I guess the low is what? 997. We had bias chart support at 992. But we've been so weak. I would have preferred to see this market drop down with a little bit more vengeance and then turn around and come back before someone thinks that we might have at least temporarily the all clear. You know, we have this head and shoulder that's been in place, and we've been discussing it actually since last week, and it has a target on my side of 917. Amanda, who's also in the chat room, her target is 897. But you can see here, we've continued to go and remain weak. Really, things would have to go on and turn around a bit here. If you're looking and you're thinking that we're going to get a turnaround here in the euro dollar, all you have to do is take a look here at the 2-hour chart. And we'd actually have to get to go in and have a short-term bottom. We'd have to get at least a 2-hour close above 1022 right there, basically called 1023, whatever. You might even push a little bit higher just to feel that you've got the all clear, which would actually be 1027. And that would give you at least temporarily would go in and put the bears at bay, and at least temporarily take that momentum away and allow the euro to come back up here. We'd be looking at, as you can see, our bias chart resistance is 1058. But we've remained weak, and it's been a sustained weakness. And why I thought that if we were going to dip below 110, which we did have a little zone area here that we've discussed in the chat room since yesterday, which was a little zone area between 992 and 1008. But I would have rather preferred to have seen this euro drop down, clear out the stops, and get people a little bit worried, maybe dip into about the low 80s. Let's say, 109, 82, 83, and then coming back and say, wait a minute, now you got a lot of people that probably got stopped out, they had their stops, let's say at, just below 10, let's say at 995, 990, 988, and they would have cleaned those out, and that would have allowed us to go on and rally back. Here, we may just kind of run out of gas, and we ultimately may end up, paring back a bit. We shall go on and see, what transpires there. We'll go and take a look here at the cable. Cable has been in a tight range, but one of the things that we talked about last week and into the analysis, and here's our analysis that we had was we started out the week, and the key was really the weekly close. And we put on here the cable for the second consecutive week experienced an intraday reversal on Friday, failing once again to sustain a close above the weekly level of 3080. The past week was far more disappointing for bulls, as the pair had reached 3166 before succumbing to a deluge of selling. The key level of focus will be the pivot 2980, with bears eyeing an run, or a possible run, to 2898 before tapping the brakes. Resistance is 3108. And you can see here that Friday we just cleared 3166. Actually, we had economic data that we had live on the European crossover webinar that we have at 4 a.m. Eastern, and it's recorded. Stelios makes the recording available in the chat room generally about an hour and a half before the New York Open. But we had just gotten there, and right when the data released, we started selling off. I mean, just within just a couple of moments, we were down 30 pips, and from there, we were just down, down, down. you know, honking the submarine horn. And you can see here this pivot that's been in place for some time, 29.80. Well, you can see that's exactly where they ran to. Essentially, you can see today that our analysis that we had, which was at the beginning of the week, we're looking, because obviously the bears had the momentum, and that's where we're saying, hey, look, focus on the pivot. The market's going to focus on the pivot of 29.80, probably get a little bit of short covering there, but ultimately with the bears having the momentum on their side, they may try and make this run eventually down to 28.98. But some short covering here coming into the pivot of 29.80 was certainly going to go on and be expected. And then, of course, like as I mentioned, we had our resistance, you know, on Monday, which actually held it, I think, almost to the pip, like off by a couple of pips at the time. Of course, this is updated, you know, as of today, so we moved that around a bit. But we did go and take a dip here. The other pair of interest has been the dollar CAD. Now, one of the things that we were talking about today, because we had our resistance here at 32.07. At the time, I think we were just about there. Actually, I think we were at 07 or 05 at the time. We said, no matter what, we're going to stick with that. It's going to be 32.07. We're there, but that's where we stand, which was the turnaround that we saw here this last week. But the concern is that we had this little gravestone doji. So had we followed with a lot stronger close, I think we could have pushed even higher. But we were able to push a little bit higher, maybe goose some stops. And we talked about it this morning. We thought, well, you know, probably 32.07 really is going to be as good as it can get. If you look on there, it looks like it hit it right to the pip. And then we said, you know, you probably don't be surprised to see the market actually weaken. Because at the time we were there, I think we were at 32.05 at the time. And, you know, I thought, well, you know, could push a little bit higher. But really, if you look at the composition of how we rallied here, and then we turn around and get this gravestone doji, you probably get a little people that had a few people that were a little bit concerned and said, well, I'm not going to step on the gas now. And so they may have got skunked in on the stops. We had a resistance level here, right there at 31.80. And then now the market will possibly go in and take a pause. We do see support for the dollar CAD coming in now at 31.44. If you're trying to get long, or where you think would be a good long to go in and step back in, because certainly the momentum has turned higher for the dollar CAD. With that, we'll go on and take a look here with the cash dollar index. And we've moved higher, but we've actually gotten just above the bias chart resistance that we actually had since Monday, which is 98.11. I think we got up as high as what, 98. Looks like 16. Yeah, 16. I think we mentioned it actually in today's webinar. We said, hey, look, we're going to stick with this 98.11, but there's a little bit more resistance there, a little level at 17. But we thought we'll take a pause around here. And we are taking a pause. We did get above that 98.11. Key thing with the dollar index, you would think that we'd be pushing even higher. But the key level has been 97.89. And you can see how we've rallied back up to this area. You remember when we broke it? It's a weekly pivot. And so you can see where we were able to go in, and you have some battles here at 97.89. And then when you break through on either on the upside or the downside, you get that follow through. And you can certainly see when we broke here, we made one more last pushback, and then we fell. Another one fell again. And you can see here we're bumping up here. Now we are above it, but the key is going to be, can we close the week above 97.89, which will be huge if we're able to go and close above that. But that's where we stand on the dollar index. Now, as I said before, is with the euro dollar, that comprises 56.4% of the cash dollar index. So it's going to have a large effect here. So with the euro staying weak, as I mentioned, obviously, conversely, the dollar index was going to go on and stay stronger in light of that. Now, we did take this dip. I myself, like I said, the bears had the momentum, but if there were some people thinking about this may be the a temporary low, but I would have rather have seen us blow some stops down here, clean out some longs, maybe get some people short, thinking, okay, we're definitely moving lower, and then come back, and then there'd be a little bit more to hang your hat on. My concern is we just went below 10. Was it barely even 3 pips? We popped back up. We can easily get back down here tomorrow. So be wary of that if you're long or you're thinking about getting long here on the euro. The next pair of consequence is going to be here with the dollar yen. And one of the things we talked about in the room is, you know, a lot of everything that happened over the weekend, I thought we would have opened up. We actually opened up at '09. We dipped down to around the 870-ish area here and then kind of bounced back up and stayed, you know, closing around maybe 890, middle 890s yesterday. I would have thought we'd have opened up at 870 and then gone sub 850. And if you look, what was it, Friday, there was, I mean, a ton of volume on the 6J. That would corresponded to us just right here at the 850. And I would have thought we'd had taken that dip. One of the things that, although we have pulled back, the dollar just seems like it just didn't want to go and fall. Remember on Friday when I was short, I did hold over the weekend. I would have thought, you know, I thought, well, heck, we're probably going to take a quick dip to around 902, and then we'll, you know, I might cover a little bit and see if it bounces up, whatever. And we just stuck there. We stuck there right there, rather than that 920, and it just wasn't really willing to go and give back. We are coming back a little bit today, and we do have some resistance. Actually, resistance I'm looking at, I think Blake's even mentioned right that 932. Today we also actually have equities pushing hard, but now they're starting to see a little bit of a dip back here. Right there, you can see here we came up to this 3281. Because I was thinking, well, you know, we do have Apple earnings after the bell. If we do get a pop, that might provide a great opportunity to go in and get short into the dollar yen. But we are starting to go on a fade here from this area here. We had actually made a run here up until this 32.72 area here, and then the market kind of pulled back. We rallied up, but took a quick dip, actually coming back to revisit 72 before we started pushing up higher. But once again, I'm thinking is that if we do get a pop in this equities off of the benefit of a strong Apple earnings, that may provide us a nice selling point. Matter of fact, if you look at it, look at the S&Ps, they're not pulling back a whole lot, but you can see the dollar yen's barely even given hardly any of it back, and that's been a concern. So I am looking around 934-ish to go in and take a short on the dollar yen, but I think you have to take your profits as soon as you get them, because we just don't seem to be able to find any follow through momentum, at least when it comes to the dollar yen. Taking a look at it here at the peso, obviously we've fallen back in the peso, which is trades inversely to the equities. And we certainly made a nice move as the equities became under pressure, going from Sunday into Monday. But here we are sliding back again. We do have some decent support here coming in 1875. But when we look at the dollar peso, this market had been really struggling over the course of the last few weeks. And but one thing, though, was key is that even though the equities were continuing to move higher, the dollar peso was just languishing here. It didn't really want to break. We finally broke a little bit, but it still held on. So the door was really open for a nice little bit of short covering. And we were looking for 1898 and then also 1905. But you can see us dipping back here. We're coming right into support here at 1875. That may hold it here, but this, almost like the dollar yen too, is when we get those gains, when equities sell off, they don't last very long here with the dollar peso, despite how oversold it is. We do have 1865, a good key level here for support. You can see that. And that's confluencing with 1862, which is 161% of this recent failed rally. So some good, very good support here. But as you know, as you can see here, equities are doing quite well, although they're paring back just a bit. I think before we can get another run, obviously we have to see some major movement here in the equities themselves. Looking here, let's take a look as far as cross rates. We did get a pretty good little move here in the sterling versus the odd here yesterday. And I thought we were maybe going to get a further jump to go and tag up right up in there, which is going to be 93.82. We came up a little bit of short and we paired back, but this obviously has a lot to do with the weakness that we've been seeing in the Aussie dollar. That has been a concern with, you know, we have the RBA coming up this first week of February. The chances of a rate cut have dropped down to 20% because we had very nice employment data come out this last week. But still, consumer sentiment as well as retail sales, coupled with the bushfires and the impact that can have raised concerns that the RBA may still go on cut and has really weighed on the Aussie, coupled with the issues with the coronavirus coming out of China and its impact, because as you may or may not know, the Australian dollar is traded quite often as a proxy for the economic concerns, if you want to call it, with China. Or sometimes if we see great China data come out, you'll see the Australian dollar going and rally. But once again, like I said, here with the sterling odd, one of the things you can also have to factor in is that if potentially the Bank of England looks to go on cut. So I was looking for potentially, if we could get just up here, maybe a little bit, one more little pop, that may give a great opportunity before we see this market going and pare back a bit. Looking here on the Aussie yen. We're seeing a little bit of a stand here. Obviously, with not only is the market oversold, we made it right down here to the 50% of this range from 66.94 to 76.56. But the market has been a little bit oversold. We've seen equities make a stand. There's also talk about a vaccine that's coming out that will be ready 3 months later. Although the news, as far as those that have been infected, continues to grow, it appears to be at least the momentum of that starting to slow a bit. And obviously, you've seen that translate to a move here in equities, and certainly that's going to be positive for the Aussie yen, which in and of itself, not as much lately, but in and of itself, over the years has been traded as once again a proxy for equities themselves. So you can see a little bit of a bounce back. Has more to do with short covering, because if you take into consideration where SPOOs are at, certainly you're thinking, well, God, this isn't even anything close to any type of a bullish response in the sense of some good strong short covering. It's just a mild short covering, and even at that, it comes in here at the 50%. Probably would have expected to see something far greater, but like I said, it hasn't responded in kind over time overall. Also, another take a look here as we're looking at here is the euro versus the Aussie. We had gone and come into a key level here. Probably take a look at it on the daily. And we were up there on the in Asia, actually in the European session, when we're doing the bias chart. Actually, at the time, we were actually just above 63.41, but we said, you know what, we're going to hang our hat on that 63.41. You can see that we had that as a bias chart. We'd actually already gone above 63.41. We were just a little bit above it at the time. I said, well, you know what, the levels are the levels, and that's what we're going to go on and stick with and hang our hat on. And you can see the significance of the 63.41. Now you've seen the market going and pare back, and one of the things that's sometimes been a bit of a challenge in FX has been the majors. Some of these pairs don't move as much. But I'll tell you what, if you're not used to trading the crosses, certainly you do go on to get this movement in the crosses. Now, they haven't been as active as they have been in the past, but they're still active nonetheless. So as I mentioned, when we came on air and we're doing the bias chart analysis, we were just above 41. I think we'd already gotten up to 45, 47, and we said, you know what, we'll still stick with this because 47 is key. You're seeing the market pare back. But you are provided some great opportunities when you take a look at the cross rates, because we do get those movements here, and they respond very well. They're not as volatile as they've been in before, because sometimes you do get a bit of a Wild West volatility. But as FX has kind of slowed down a bit, it's really the cross rates that you can still trade in here and still make some decent money intraday trading. Or if you want to hold overnight, traders like Amanda do go on and hold. And really the ones that I found that are the most active are going to be the starting pairs, whether it's, starting versus the odds, starting versus the yen, or cable, starting versus the dollar. Those have been the ones that have been the most active because, like I said, some of the frustrations have been that the ranges have not been tight at all when it comes to FX. But in the cross rates, you are still seeing that movement where you can go in and move around and step into positions intraday and still be able to make a decent amount of change. And so we do see that. And so if you're looking at some opportunities, I would certainly go in and point to the cross rates. And with those, if you want to see some movement as far as some volatility to go and take advantage of, I would go and focus on the sterling cross rates, whether it be you're used to the cable, sterling versus the dollar, sterling versus the yen, sterling versus the odd. Certainly would go in and take a look at that. Obviously, the euro sterling is certainly one that's, the volume is very high, but I don't, not a pair that I trade very often at all, because it doesn't have very much volatility. And for me, I focus mainly on day trading. But anyway, that's all I want to go and share with you. Blake will be here tomorrow. Like I said, just filling in while he's attending the Phoenix Open with his wife, enjoying friends. So thanks for joining us here on the FX Daily Roundup. And like I said, consider a trial subscription here with ForexAnalytix. You can join us here on the European crossover webinar where we're here in Europe. We set up the daily analysis with the intraday levels for day trading / scalping. And then, like I said, if you're not available at that time, US-based trader, well, the recording's made available by Stelios, and he makes that available about an hour and a half after we've done about an hour and a half before the New York Open. And of course, like I said, we have a lot of great support here in the chat room. But anyway, good luck trading the rest of the day, and thanks for joining us here on the FX Daily Roundup.